Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? Welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you all had an amazing trading day yesterday, as we are going to do what we do each and every day, looking for potential reversals and breakouts from an educational perspective. S&P this morning is down 12 points. We're falling off almost 0.5%. Nasdaq is down 0.5% as we have finally broken out of our range. Let's go ahead and dive in. S&P, we did get a little bit of a bounce off of our demand area that we had yesterday. And it did give us a little bit of a 2-to-1 move. So for those of you that are regularly reading the trade feed updates, we talked about the fact that we were at 2-to-1. You move the stop to break even and take some off the table. And the reason for that is because I was a little bit concerned at the fact that we were getting these two upper wicks. Whenever I see those two upper wicks, which essentially is, you know, you'll hear the term tweezer top. This was essentially a tweezer top, which is a fairly bearish signal, and we did get a pretty good bearish signal here. About a 4-point risk here. It moved up about 10 points from the entry, and so at about a 2-to-1, I was okay saying, take some off the table. Now, what caused this big move down? This is the manufacturing numbers, and the manufacturing numbers in the U.S. This is a pretty big response for something that frankly isn't that big of a deal usually. Not something that we typically see having this kind of a movement. And so as price fell away so hard, this is actually a really interesting thing about what the whole market could look like. It just shows that there's a lot of fear out there, and even the slightest scare caused us to have a pretty big sell-off. So for today, our next level of demand isn't for quite a bit lower. When I look at this on a 4-hour chart, our downward trend, we'd had a weakening of our downward trend on the 4-hour. It's now much more solidified, and so looking a bit higher. We sold off again in the overnight sessions, but I'm going to put my lines around this little wick over wick area here as our next opportunity. Now, remember, anytime we have our lines, anytime we have a wick over wick area, my line has to go above. The closest this stop could be would be above this candlestick right here. Realistically, we'd want it to be above this one, right? You want to always take your stop above the pivot, not just outside of that line. So that's where I would look for today. We may not make it all the way up to there, and so you could get another opportunity, maybe in a candle-to-candle short. If you go to a 15-minute chart, there's a little level here, and this is formed at a fairly decent time of the morning. You can even go a candle-to-candle short on something like this as well. So let's go ahead and take a look next at the Nasdaq. Same exact picture, except we didn't have the demand level set up in the Nasdaq for any sort of a reversal. And in the Nasdaq, we would get essentially the same level right up in here for a potential reversal. So both of which look essentially the same. Crude oil. Yesterday in crude, we did fall off pretty hard in crude. Came back to our crude oil level. We poked a little bit below that area. Now the stop loss on that crude, you've got the origin was found back here. Your stop loss would be a little bit below that level. Let's move over a little bit here to the origin of this zone. So we had this little area in here. Your stop loss, you want your stops to be somewhere down below there. So we got a little bit of a kick below, but not enough to hit where the stop out would be. And we got a decent little move away, but it took a while. 1, 2, 3, 4, 5, 6. We talked a little bit about the 6-candle rule, and it hadn't really gone a whole lot after that move. But we got a little bit of a run out of it. Now it's just kind of faltering through. So I need to remove this level completely. We traded all the way to the bottom of it, a little bit below it. Came back to this little wick over wick area. And this little wick over wick area right here speaks to what I just spoke about in the S&P. it's that the wick over wick area is a good level, but your stop would have to be above this leg in. I've talked ad nauseum about the fact that you know it used to be that you could just put your stop right outside the farthest line in your zone, and you wouldn't normally get hit. And I just don't think that's the case any longer. I think you need to give yourself much more wiggle room, because I think that on purpose there's more stop outs. I think that somebody's got enough money and there's enough traders using the same system and the same style that I have to widen my stops a little bit and do things a bit differently than everybody else. So looking at crude, for today, we've got still our bias is still going to be pretty bearish. We've sold off really hard the last few days, and so any rally is where I'm going to look to sell. Now I've got a potential area back up into here at this high right there, and that's a 15-minute level. Now in this case, your stop. This is the pivot, so your stop is going to be just above the pivot if you decide you want to give this one. Now remember, this one is a 15-minute level, and we've been seeing a lot more weakness in 15-minute levels over the last little bit. And then looking at gold. So in gold, we did have a decent little level up in here. Once again, popped through it just a smidge, but enough, depending on how tight you place your stop. We did get a little bit of a move away, but not a whole lot, and that tells me now that we could have a breakout above here, provided that we get a little bit more basing in here. So keep an eye out for a potential breakout long here. This was a great setup. Unfortunately, this was our confirmation entry, and it rallied hard off of our confirmation entry. Unfortunately, it was a confirmation entry and didn't get in, and so we're always going to have days like that. So looking at the bonds and currency markets. Now, bonds rallied really hard yesterday. Bond market rallied right up out of the area, and I, based on the price action, I had anticipated that we would see a bit of a reversal at this wick over wick level with a stop here. Nope, blew absolutely through there on that news, as there was a flight to the bonds, and so with that, price has to be removed. Now, our breakout trade that we had talked about prior, this was our breakout. There's no reason to enter this breakout, and the reason there's no breakout is because we didn't base in front of the level. I need to have basing in front of the zone. So now what am I looking at? Well, after that parabolic move up, this now becomes a price magnet. This area now becomes a magnet for price to return, because this was a speed candle, and speed candles tend to get retraced. In the Aussie, we talked about a breakdown, but once again, it was the news area. Ingrid, nice job on the unfortunately the stop out on that piece, but we know the rules on trading around news announcements for breakouts, and that's exactly what this stop out was a news announcement here. And so we've continued our move down in the overnights. We got a little bit of a rally yesterday with the weakness in the dollar for just a brief moment. And so now it sets up for a potential reversal right here if price does indeed get back to there. The euro level, this was price comes into the zone, 1, 2, 3, 4, 5. This is one of those 6 candle rules that one of the rare 6 candle rules that wind up biting me a little bit, because the market had gone nowhere for 6 candles. You move your stop to break even, you're out with a little bit of a break even. However, it wound up moving down pretty nicely out of there. Now, coming back up into it, I don't want to try this one all over again. I do find this potential for a breakout to the upside here if we get basing in front of this level. This little big fairly rounded bottom here, and then a little bit of it here. I mean, I know it's not a true cup and handle pattern because that's not an intraday pattern, but this could be a little bit of a move higher. Looking next, Canadian dollar. All the movement we had, and the Canadian dollar still didn't get anywhere near any quality levels, as we've seen that's kind of been a a staple here. I'm going to put my lines around this little area up there, potentially for a Canadian dollar reversal spot. Great British Pound and Japanese Yen as our final markets for the day. Looking at the pound. So in the pound, we came super close to our 15-minute level again, rallied up off of it. What I need to do at this point, we've touched it once, got a nice move away, came super close to hitting it again, moved away. You know, it's a pretty good level, pretty good zone, established at a good time of the day, but we've come too close to it a couple of times that I'm not comfortable leaving it in place. So I'm going to remove that level from consideration, and I am going to look at here, but I'm only going to look here at a candle-to-candle area. This is a gap fill trade here, where normally I would just look at this, but the fact is that I'm not totally confident in our big picture direction. So if you're interested in this area, do candle to candle when price gets up into this region. I think that a candle to candle trade could be effective somewhere up in that region. Japanese yen, this one we got a nice move away on this, the first touch, and so price gave us a really good move away. Unfortunately, I didn't change the picture, but we should all know the rule. After one good touch and a really good move away, this converts to a confirmation trade. I forgot to change it to a dashed line yesterday, but hopefully you all know the rules by now. After one touch, we switched to confirmation, and then the second time in, it just blew right through the level. So that one would not be a valid position. So now looking at the 4-hour, we are pretty entrenched in a fairly sideways price action. So I need to be cognizant of that, which means I don't look at really any 15-minute levels. This hourly level up here, I think, is still pretty good and pretty strong. So today the markets are still showing a fair amount of weakness. Let that weakness continue. Don't try to trade against the big picture. Follow the big picture market direction. One of the things that I would say is I am a little bit concerned for October in regards to when earnings start coming in. So just keep that in mind. But until tomorrow, everybody, if you have any questions, please send us an email, support@tradersarmy.com. I will talk to you soon.